right, those were all the top stories. So let's take it one by one. First up, Lupin is losing in trade on the back of a weak set of quarterly numbers. In fact, the stock has lost quite a bit in the last 6 months as well. Ekta will be giving us the fine print. Ekta, not looking good, down 3% almost for the stock now.
Yes, absolutely. It was an absolute margin disappointment for Lupin this quarter because to put it into perspective, the company had guided that after a disappointing previous quarter, their margins would recover to 16% in the second half. But that hasn't happened. They reported around a 9% margin adjusted for an extraordinary outflow this quarter. It was around 13.7%. The street was anticipating around 15.5%. Besides that, the revenue was up around 4%, and that's important to point out because the US business did well for Lupin this time. They came in at around $202 million. They had guided for that they would touch $200 million in terms of US sales, and that's a higher amount on a Q-on-Q basis as well as on a year-on-year basis. They're confident of maintaining those levels for the next couple of quarters as well. Profit was up 24%, and that was aided by a tax write-back. What the street is worried about is when will margins recover as well. In the second half of FY23 is when the possibility in terms of when the margins would probably iron out for the company, and that's probably what is spooking the street at this point in time as well. So yes, a lot of positives have gone well for the company, such as the Goa plant approval, etc. But it seems as though the markets are now focused on the margin recovery for the company. In fact, to discuss the numbers and the business outlook, we have with us the MD of the company, Nilesh Gupta, and Ramesh Swaminathan, the Executive Director and Global CFO and Head Corporate Affairs. Nilesh as well as Ramesh, welcome to the show and afternoon. Nilesh, let's start with you and margins, which was actually the biggest disappointment this time. It came in at an adjusted 13.7%. Tell us what led to that.
I think it started with the gross margin line. There's a change in the business mix and material inflation, which has happened as well. Roughly 0.5% on count of material inflation, another 0.3% difference on the business mix. Otherwise, it's actually really business very similar to the previous quarter. So we did 14.1, 13.7 this time. These two elements are really the elements that made the difference. And obviously, we expect them to even out over time. The other lines, by and large, were in line with expectations.
All right, Nilesh, the guidance by the company has been 16% in the second half of the fiscal. Where do you stand now? Can you provide some guidance to investors?
Yes, that was our earlier guidance. I think we've definitely seen more competition in some of our products in the US. Products like famotidine, products like Glumetza picking up as well, and I think that keeps those numbers muted. With that, I really see material movement. We'll see some movement, but I really see material movement in H2 of the next fiscal. So H2 of FY23. We have 3 quarters that we need to go through. I think the goal in these 3 quarters will primarily be optimization of spend so that we are able to turn out respectable numbers. I think from the second half is when we really see the pipeline kicking in, especially in the US. We see products like, PEG-G, we see Suprep, we see Spiriva at the end of H2 as well. And then you really see it coming into full swing in FY24. So I think in FY23, you're going to see a blend. I think for the next 3 quarters, it's not going to be a very material change. There is a clear focus on optimization. But I think in the second half is when you'll see the EBITDA starting to pick up. And in FY24 right now, I see that as firmly back over 20%, which will be a very solid footing to start building on again.
Okay, all right. But Nilesh, while the margins disappointed, your US sales reached that guided $200 million mark. What was price pressure like this quarter, and which drugs, in fact, managed to scale up?
So I think the price pressure has been, I think it's been a constant win. I don't think it was much more across the board in the quarter, but I think on select products we've been feeling that pressure, right? So high contribution products like famotidine, oseltamivir, there was no flu season, so you see the profile coming down on those products impacting the numbers. The big uptick was on the inhalation portfolio. I think Brovana stayed strong, and albuterol actually reached a record level in the quarter. We're actually very proud of the share that we've been able to command there. And I think it's a very solid anchor to build the rest of the inhalation business on. So I think the inhalation portfolio helped drive the double-digit growth, which was otherwise offset by some of the other products, right? So if it had a normal flu season or the like, you would have looked at a significantly higher number on top line as well as on margin.
Nilesh, what is your guidance on a run rate in the US markets? I mean, in the next few quarters, what do you think you can realistically do?
So I think we said that the goal is to firmly keep it over the $200 million. We've been able to do it for Q3. I think we'll be more or less thereabouts in Q4 and thereafter. I don't see meaningful uptick again in the first 2 quarters of the next fiscal. I really see the next 3 quarters more or less at this kind of level, plus or minus 10 million here or there. But we really start seeing it pick up from Q3 onwards then.
Okay, Ramesh, I want to come to you now. The debt of the company has risen by almost $300 million purely because of the Glumetza payout. Can you tell us what is the total debt on the books considering the recent acquisitions, that diagnostic business outlay, and any plans to reduce debt in the near future?
Yeah, so our debt equity position is even now very comfortable. As you correctly pointed out, it has risen a little only because of the fact that you paid out, the settlement on account of Glumetza and the like. But otherwise, and there's of course been an increase in working capital itself to some extent. You'd be addressing that as well. The acquisition we're speaking about has not been paid for as yet. It's going to be a few more days. So it'll add to the overall debt per se, but there will be a reduction in working capital and the like. So you would expect things to be stabilized on the working capital front and a reduction in the working capital front, and debt to be around the same levels.
Okay, all right. So debt should be around the same levels, and working capital debt should probably reduce going forward. But Nilesh, leave us with a larger vision for Lupin. It seems as though the street is also worried about where exactly the company is headed. On one hand, you have margins which are under pressure. On the other hand, the company is expanding into new verticals such as diagnostics. And then there is that acquisition of the Anglo-French brands which has taken place in India as well, which is over 300 odd crores. So give us the larger picture. Are there too many balls to juggle at this point?
So there are several balls to juggle. I think we have clear verticals across the generics business, the specialty business, the branded generic business across the world. India fits into that branded generic bucket. I think there are two great big drivers, the US and India. Again, this is for the industry, but also for us. And in US, the story is moving from generics to complex generics. I think we changed from identifying products to doing research on them to filing them, now getting them to approval. And the point is that you need to have 2 or 3 albuterol kind of products coming to market each year. And that's the only time when you can really count on that business continuing to grow sustainably. India has obviously been fairly linear growth. It's been investment, but it's been linear growth in that. And I think it's a market that will continue that way as well. So our plans in the US, we're number 3 in the US in generics. Obviously, we would stay there and we would grow on the complex generics front, and in that bring a lot of value to the market and to ourselves. In India, we're number 6. Sometimes we knock on the door at number 5. And it's an extremely fragmented market. There is a lot of headroom for growth. Obviously, our plans are to move to that number 5 firmly, get to number 4. There's a big gap between number 4 and number 3. So obviously, we would eventually get there.
Okay, all right, Nilesh as well as Ramesh, it's always a pleasure. Thanks very much for joining in and speaking with us. So that's on Lupin and the Q3 numbers, stock down around 3% obviously because of the margin disappointment and the larger picture in terms of when exactly there would be a sustainable recovery. We'll take a short break, but Westlife Development